Asia-Pacific markets mostly retreated as investors awaited crucial insights from US Federal Reserve Chairman Jerome Powell's speech at the Jackson Hole Summit later on Friday. Japan's inflation data and ongoing market volatility in China also contributed to the region's mixed market performance. Japan's Nikkei 225 slipped by 0.1%, while South Korea's Kospi dropped by 0.51%. Australia's S&P ASX 200 also declined by around 0.4%. Japan's headline inflation remained at 2.8% in July, unchanged from the previous month. Core inflation, which excludes fresh food, came in at 2.7%, up from June's 2.6%. However, the core inflation, which excludes fresh food and energy, dropped to 1.9%, its lowest since September 2022. Meanwhile, mainland China's CSI 300 extended losses for the fourth consecutive day. Hong Kong's Hang Seng Index was down 0.73%, impacted by ongoing market instability. Let's get more on this now with Nadia Al-Bilassi. She's Senior Market Analyst at Equity Group and joins us now from Dubai. Great to have you on the program with us, Nadia. Now, help us understand what a stagnant inflation means for an economy like Japan's.
Thank you for having me, Taiba. So with Japan's economy is obviously quite different than the other economies of the world. We have inflation remaining above the 2% target, but still they are planning to hike rates. I think Ueda in his last speech, he did mention that they are willing to hike rates as long as inflation continues to move inward line. Now, inflation in Japan is somehow stagnant because of a mix of demographic, like an aging popularity an aging population that spends less and saves more, and also that has a little bit of like a cautious stance into spending. They're not like the usual sort of consumers, and not well, at least comparing it with the US resilient consumer, and also because of the quantitative easing that we've been seeing over the years. I mean, they only hiked rates for the first time in 17 years a few months back, and that kind of rolled things over. But we have an aging population, and we do have the quantitative easing and a different kind of policy in Japan as well. So a lot of factors, they play out into making the inflation levels low, especially when there's less spending, there's less wages, and there's also a shrinking workforce.
Right, and what role is market instability playing in the Bank of Japan's cautious approach to economic changes?
Definitely, after the Bank of Japan raised rates by 15 basis points, there was an end to the carry trades that a lot of investors were exposed to. I think after the end of the carry trades, the yen sort of stabilized a little bit. We're seeing a sideways range in the dollar yen right now, and we might even see another hike in October that could support the yen even further. So we're going to see more appreciation of the yen over the coming period, especially with the dollar going lower, because we are anticipating interest rate cuts from the Federal Reserve as well. So you have expectations of an interest rate cut from the Fed, and you have an interest rate hike from the Bank of Japan. So these two policies are going to balance themselves out, and we might see an appreciation of the yen. And then we're also going to track Wall Street into the optimism that it's going to go on, or the rally that might be sparked after the first interest rate cut.
All right, Nadia Al-Bilassi, Senior Market Analyst at Equity Group. Thank you very much for your insights.
Thank you, Taiba.